Another wild day in the markets after President Trump gave a not so convincing speech yesterday night and everyone was freaking out and thinking, oh my God, there is no plan, and the market crashed pretty badly in the beginning of today, but then recovered nearly completely. Not so with Tesla. Tesla took a giant hit, down 5.54%, while the Nasdaq is only down 0.26%. And why is that? Because Tesla actually also came out with delivery numbers for the last month, and they are not looking very pretty. And today we are going to look at these numbers, but we also do something much more important. We put these numbers into perspective with what is actually to come and why this reaction by Tesla stock is completely inappropriate and, in fact, in my opinion, a great buying opportunity. Pending, of course, the insanity going on in Iran that might very well escalate dramatically over the Easter weekend, I'm afraid. So I'm holding a little bit back, but let's assume we make it alive into next week and the White House gives us a little bit a peaceful Easter. Then it's time to potentially double down. And here is why. Let's take a look at these numbers. Amit is reporting them here on X. Many others are too. But basically, Tesla Q1 deliveries, 358,000 versus 372,000 expected. And energy, of course, came in low. So what is the problem? When we do the math here, we see that we are 14,000 deliveries short. Market freaking out. Maybe energy is part of it, but I want to focus on the cars. Look at this disaster. Nearly all of these it's nearly 5% pure negative alpha. Because the beta, if you do the math, Tesla has a beta of 2, Nasdaq is down 0.26%, so Tesla should be down actually 5.5%, but it's down 5.5%, which means 5% down because of this situation. Now, I want to put this into perspective, and I want to just go through some very quick math with you. Sorry that this doesn't look too pretty, but I just map this out just for this video very quickly. We have a delta. Let's start there. A delta of 14,000 deliveries. That is the equivalent. If we assume $6,000 margin per car, if it's a Model Y and good margin, like a slightly higher trim, the equivalent of $84 million that we were missing in this quarter. Okay? Now, very interesting. How does this actually relate? How does this number, this 84 million that we were missing this quarter, that dropped the stock by an incredible 5%? Of course, we're ignoring energy for a second, but let's just look at the cars to make clear what that means. Now, the Robotaxi has actually a margin, and here comes the crazy thing that a lot of people are not aware. Every single Robotaxi, when it drives 200 miles a day, okay? Commercially, 200 miles a day, unsupervised, which is normal once it's in operation. 330 days a year, so I'm giving them a lot of maintenance days. Actually makes $50,000 in margin per year. Can you imagine that? $50,000 in margin per year. That is nearly the equivalent of 8 Model Ys. So at every single Robotaxi, 8 Model Ys equivalent. But this is also per year, okay? This is per year. Let that sink in. So this is quite the crazy situation. And when you think about this, the equivalent of these 84 million missing dollars, let's say in this year, make it simple, it's in a quarter, but let's say in this year, you can do the math, extrapolate it to the year if you want, is 1,680 Robotaxis, right? Not 14,000. It's only 1,680. But now we have to also consider that these Robotaxis make that every single year without being reproduced again. If we assume the depreciation is 10 years, which is a normal assumption for a car. I mean, it's an aggressive assumption, but let's say it's 10 years. That means the equivalent of Robotaxis in full commercial operation to make up for 84 million or 14,000 in this quarter is only 168 Robotaxis. Okay, let that sink in. What does this all mean? It means the stock is down 5% because we were missing last quarter the equivalent of 168 Robotaxis. Okay? And that tells you something. That tells you what happens when Robotaxi actually launches. And when we deploy hundreds and hundreds and then thousands and thousands of these things every single month, potentially this year, thousands of them in a single month, in December, in November, in October. And this is not a joke. This is real. You can see how the stock reacts if we create the equivalent of how the stock behaves based on a 14,000 Model Y miss or Model 3, whatever, like a car sales miss. It's the equivalent of 168 robotaxis. Maybe you can multiply it with 4 if you say this is quarterly and I'm comparing it annually. Doesn't matter. And that tells you how important it is. If we see the equivalent of 5% of stock appreciation with every additional incremental 168 robotaxis deployed, you can do the math. You can do the math. If you take this times 20, it means if you deploy 4,000 robotaxis, you double the stock. If you deploy 8,000 robotaxis, you triple the stock. If you deploy 12,000 robotaxis, you quadruple the stock. Of course, I make it a little simple. We have better models to determine that, but just based on this reaction today of the stock price and putting in the equivalent in robotaxis, it shows you how the market values cash flow and how the market looks at Tesla and the margins it brings in and how much it drops it when Tesla underdelivers. Logically, it should appreciate the same amount if Tesla exceeds expectations by the same amount. So I hope you understand what I'm saying here. This is of course not a clean science. There's energy business also amiss in here. But even if you double these numbers or whatever, you get my point. We're talking about 168 and this is a quarter, by the way. This is a quarter. So you could also argue, well, we have to multiply this number, right? If you say quarterly, we have to actually multiply this number, right? Because here we have the quarterly miss. So the equivalent, I said this is annually delivered. So we have to multiply this by 4, right? So basically the miss is 4 times higher. So this needs to be 4 times higher. Basically, this is 4 times higher. But you know how it goes. If we go where I think we will go this year and deploy thousands per month, if you deploy 2,500 in the last month, that's the equivalent of deploying 10,000 in a quarter, 10,000. Okay, so whatever the numbers are, if we get to multiple thousands of robotaxis deploying each month this year, it will have an absolutely massive impact on the stock. And we will learn not to be mad at days like this when Tesla is down 5% because it missed some sales, because all this negativity that the markets and the analysts are now pushing on Tesla when it misses on their hard business core will turn into excess positivity once we deliver cash. I want you to look at the two sides of the coin. Some people say, hey, Tesla is not a car company anymore. What is the market doing? Why is it dropping it so much? Because the market in the end still cares about cash flow. But that goes in both directions. It also means once we deliver excess cash flow, to the extent that Robotaxi will deliver it, we will see these effects completely reverse to the upside. That is why we have to understand 160 Robotaxis deployed is the equivalent of that miss of Q1. So it boils down to the question, do you believe, as I do, that we will get to multiple hundreds deployed every single month very soon and potentially multiple thousands deployed every single month as early as Q4 of this year? And if that happens, we will see the stock, as I said multiple times, double and triple this year. I do believe, I repeat it now, if Tesla manages to deliver and deploy over 10,000 robotaxis, more over 20,000, between 10 and 20,000, the stock is likely to go above $1,000. That is what I believe. And today is one of the days when you read between the lines, when you read the numbers, that actually confirms that logic. So all the discussions and all the panic can be condensed into one single question. Do you believe that Robotaxi is real? Do you believe that Cybercab is going to scale without a steering wheel? Sorry, Farzad. We will see. If they sell it with a steering wheel, Farzad will be the greatest man that ever lived on X. But if not, it's going to be bad. If you believe as me, as I do and many others do, that Robotaxi is real and Cybercab is coming, that we are observing FSD 14.3 being deployed, that we are observing that Cybercab is now starting to scale, very likely in April. You have to get ready. You have to get ready because this whole situation can flip in an instant. Iran can be over in an instant, as early as next week or the week after, maybe after another drop if they go nuts again. But once it's over, all eyes on Tesla. And when all eyes are on Tesla, that means all eyes are on Cybercab and the question if we can scale. If there was ever a time in the last 5 years to pay absolute attention every day to all the news, of course to me first, on X and here, but also all the other great channels that follow that so closely and all the other great Tesla tubers and Tesla Xers, from Sawyer Merritt to of course the great Herbert, to of course Amit and everyone else, even Fazat. We have to watch this because once this happens, you can't think in analogies and you cannot get lazy and follow inertia of the stock going down or flat for the last 5 years. When it happens in a big way, and that big way is very likely coming now, this quarter. So let's stay tuned and watch that like hawks. Not war hawks, greed hawks. We want to actually nail this stock inflection point. I think it's very soon. I hope that was interesting. See you tomorrow.